Good morning, traders. Chris Buss here with your morning look at markets for Friday, November 19th. It's 6:20 in the morning as I'm starting the video. And as always, don't forget to run your player at 1.25x or higher to work through the material quickly. Taking a quick look at markets. ES basically flat. NASDAQ up a little bit. Small caps are looking a little rough, down almost 1%. Oil is also rough, down 2.3%. Oil all of a sudden has gotten really soggy, and I'm not sure if it's, probably a combination of things. One, I don't know if you saw, but Europe is looking like it's back in an upswing of COVID. Germany has definitely got a problem. And also there's the threat of a strategic petroleum reserve release, not only from the U.S., but from China as well. So there's some supply dynamics and demand dynamics going on out there, but definitely soft. Copper up 1.4%. Precious metals flat. Bitcoin's down about 2%. That also has been pretty soggy lately. Over on the macro front, not a lot going on today. We've got Richard Clarida speaking. He's the vice chair of the FOMC, and we've got rig count. I think the biggest thing yesterday was the Apple announcement that they've made some kind of breakthrough on their autonomous driving chip, and that they're continuing to focus on their autonomous car for targeting 2025 to get that done. And that put a real whack on Ford and GM and a lot of the other electric car makers, not really Tesla, but some of the juniors out there. So that was kind of a big event, and of course lifted Apple to all-time highs. We'll take a look at that chart here in a minute. Over on the earnings front, yesterday after the bell, there were some marquee names that I want to run through. These will be really good for you. Well, if you're one of those traders that likes to trade right after earnings, you might see some good trading opportunities in these names. But for the rest of us that prefer second day plays, add these to your bracket trade watch list, and then they will become nice bracket trade setups for beginning Monday, second day plays. So Applied Materials was down about $8. Ross Stores down $10. Workday down $25. Williams Sonoma was down about $20. We did have two names that were trading up. Palo Alto Networks was up $20, and the big winner last night was Intuit, that had a $60 moonshot after earnings. So that's going to have a really big gap to potentially trade down the road. So, okay, today's Friday, Lotto Friday, if you're into that kind of thing. But, if you can catch a runner, and you've got some discretionary funds that you're not afraid to lose, it can be a good opportunity if you catch the right name. What I like to do is just focus on a few names, usually in the FATMAAN complex, where you know your levels really well, and you know the names really well, and you've got a good feel for the names. I usually don't like to just jump around on a Friday throwing darts, but if I see something in those names, might take a cheap shot at something, and if it works out, it works out. Really, yesterday was a day where you could have made some great money on some names, and we're going to go through that. Let's go through a few things I want to point out. Not so much here on the dollar. We know that's been in a breakout mode. We reached the midpoint of the rising channel and have backed off of that. What we may see here is a little consolidation action into next week, and then it can decide whether it wants to take the next leg higher. Rates have backed off a little bit. We came up here and touched the upper reaches of this range. Now we've backed off a little bit, and if rates are backing off, TLT is going to be jumping up a little bit here into the back into this range. Time will tell whether this was a false breakdown, which is always a possibility. But I've been surprised how easily it has traded through the 200 and this lower level of the box. It just seems like it, has just sliced through several times without really stopping. So hard to tell exactly what the future path is going to be. VIX has popped up. We were down here in the low 16s, and now we're pushing the upper 17s. And keep an eye on this today for a break above 18. That would be kind of bearish, of course. Some interesting things yesterday on breadth. We know that NASDAQ made a new high, but the number of stocks above their 50-day moving average dropped. So that's telling you, specifically yesterday, it was all FATMAAN mega cap driven, the advances, while the underlying stocks were down, because our trend in the percent above the 50-day is losing steam. So now we've got only 43% of our stocks above the 50-day, and that's not really what you want to see when you're trading at all-time highs. You would expect that to be higher. So we've got some weakness under the surface, and same thing with the NYSE. It's in a better posture, to be frank. I mean, we have dropped from 75% down to 60%, but again, yesterday we saw that percent drop, so that means there is some deterioration under the surface, and we haven't looked at this in a few days. Here's our equal weighted SPY. Now you'll know that we were up slightly in SPY yesterday, but the equal weight was down, not a lot, 0.4%, but whenever you see SPY green and the equal weight red, again, you know that the average stock then is down, not up. So yesterday was a lot about Apple and Amazon and those high cap weighted names in the indexes holding up the whole show and possibly giving a false impression of how strong everything is. Well, yesterday it really wasn't that strong, and you can see here we had what was that? Tuesday had a doji candle where we broke out and then sold back, and then Wednesday and Thursday we were down, not a lot, but still down, and we reached down to this 20-day exponential moving average. We tagged that and bounced. So what I want you to watch is bring some of your equal weight indexes into focus and keep an eye on those for erosion under the surface. So let's move on to SPY. What I've done here is drawn in a potential cup and handle setup. If things stay constructive and we break out, whether it's today or next week, doesn't really matter. If we come up here and then break the prior all-time high with this structure, that could be pretty bullish, given this structure. That would project something, let's see here, 464 call it, let's just call it 470. So that's $6. So that would project a target of 476 if we were to get that breakout and then have that breakout stick. What I don't like, and we've talked about it a million times, is the bearish divergences that are present. We can see that, we've made a couple of runs at these highs, but momentum and RSI are fading, and that's not what you really want to see there on the indicators. And here we get a more granular view on the 30-minute chart. You can see that we've got this prior high right here at 470.25, more or less. So that's going to be a pivot for today. If we can break above, it's got room to run. And don't forget, today is November OPEX, so that may be a catalyst, or what you sometimes see is the market makers really working to keep price contained, because they don't want a bunch of people making a lot of money at the November expiration. So it'll have a lot to do with the positioning. And if I get some information before the bell on where that call wall and put wall is, then I will send that out to you. But there's always the possibility of market makers jacking around on an expiration. And by all means, run through your holdings this morning. Make sure you know what options you may have expiring today, and make sure you do something with them, either close them out or roll them forward, so you don't get any unwanted surprises tomorrow. Excuse me. All right, here's the cues. We did make an all-time high yesterday, but again, with bearish divergences present, we got a marginal new high, but at lower momentum and lower RSI. Those are cautionary. You want to, making a long story short, you want to stay above 400. You break below 400 in this little rising wedge that I've got drawn in here, you'll probably make a move back down in here to 398. And by all means, you do not want to drop below this 2-hour channel. Remember, we had broken out above. We came back into the channel, came down and touched it, and it held. That's what you want to see. And we've had this steady ramp from that point forward. But now, you don't want to roll back over and then break below this rising channel. That would give you a sell signal on this time frame, and then you'd probably see 394 and lower. So I think the key levels are right here at 400, 398, and let's call it 396 at the bottom of the channel. And here's that wedge that I was just talking about with a little bit more granularity here. I guess I should really restate that 401 is probably your level, and then you got 399 and 398 here as levels on the 30-minute chart to watch. And then those levels will be slightly different on the 2-hour, depending on what time frame you're really focused on. But anyways, you want to hold this wedge if you can. Otherwise, moving down towards the bottom of the channel would be favored. Now, IWM is the one I'm most concerned about here short term. Why? We had this big, exciting breakout a couple weeks ago from a extended consolidation range on the daily chart that goes back almost a year, and we were saying like, okay, here we go. We got an initial burst, but then it's been fading. And so now yesterday we had a perfect tag of that 233 level, which is the breakout level. So from a technical standpoint, breakout back test completed. Now you got to hold 233 and move north to get that breakout back test go type of a look. Now pre-market, we are trading like right on this level, right on this 233 level. You don't want to break down below that, otherwise you're back in that daily trading range. And once you leave that range, you do not want to come back. That's a bearish event. Now I will say one thing. There's one last chance to save it, in my opinion, and that is right here at 230. Why? You've got resistance, or yeah, it was resistance here. Now it's going to be support. And also remember, you've got the 50-day on the daily coming in right at 230, right at the same line. So you've got a double layer of support there, and it wouldn't be the first time where price would break below a key level. There's probably a lot of people that got stops in this area from this breakout. You know, that's normally what people would do. You know, you get the breakout, then you set your stop right below. It comes back. You know, the algos and everybody else knows where those stops are. They make a real scary bar, come down here to the 50, tag it, and then reverse. It wouldn't be the first time that that happened. So kind of get, if you're long IWM, kind of get in your head what you want to do or how you're going to trade it. You could do one of two things. You could just say, I'm going to hold my ground till the 50, and if they break that, I got to get out. Or you could say, you know what, I'm going to get out. I got long at 233. I'm going to get out if it gets below. And you know what, if price comes back up and it was a head fake, then I'll get long again. So there's a couple ways you can try to do that, but just have in your head what your approach will be. And then here was that deep reach down yesterday, right to the level that we talked about, and then we had a little bounce. But like I said this morning, futures are down about 1%. So we're going to have a gap above price on the open that, you know, they may come up and fill it and then go down, or, you know, just fill it and keep going. So that'll be a game time decision. A lot of action in the FATMAAN names. Facebook really wasn't one of them. After this big initial burst, they have faded quite a bit of this move. Not sure why, but it doesn't really matter. Right now, I think it's got to hold this, what is that, 337 type area right there, or else I think price will roll down to this gap. And that may be, if there's weakness today, that might be a decent little lottery pick, because there is a lot of air below this structure. You know, a big ramp, then a fade. There's it's not really an air gap, but there's definitely a void of trading just below this level. And if you get a breakdown and there's general market weakness piling on, you might get a move down to, you know, 330 relatively quickly, and then they will have faded this entire move. So that may be a candidate for you. Now Apple, here's the daily. We talked about that autonomous car development press release. We do have an all-time high above 157. Notice the bearish divergence, though. We've got a new all-time high, but the momentum is not all that impressive. So we got to watch for a prairie dog, right? Pop its head up, take a look around, and then get faded. So if you got long yesterday, just have your stops in place and then see what happens. But if this turns out to be a head fake, then you'd have essentially a double top. You'd have it here, and then you'd have it here. And then if you wanted to change your posture, that would be a very objective place to do it on a fake breakout and a reversal. You could get short against 157 with a stop just above, and then see if you don't get this move back towards 150. And I think really the only way that works is if kind of everything starts falling apart. You know, if you see, Facebook going down, Amazon going down, Google, Tesla, and you see that general market weakness, then you may have a good shot there to be short against 157 if you get that fake breakout. Actually, I'll show you the 60-minute chart. I wanted to do that anyways. Yeah, see here was the breakout from 150. We got a big impulsive move, some flagging consolidation action. Then we had a really strong day yesterday, and then the breakout. But take note of the candles on the 60-minute chart right here. You'll notice that all the wicks are on the top. So that means that there was an initial push, and then the sellers came in to knock it down. You want to see them, if you're a bull, you want to see it the other way, that sellers tried to knock it down and then buyers stepped in and have the wicks on the bottom. So there may be some motivated sellers up here. Not sure why, but it'd probably be, profit taking kind of thing, especially if the market is weak today. There may be some people that want to sell it back down. So moving on to Tesla, really nice chart here. This might be a nice candidate for today if you're lottery minded. You've got a beautiful flag type structure, and we've talked about it over the last couple days. You've got a floor at 1080, and you've got the top of the range at 1115. So if you were to get a pull in to 1080, I think you can be a buyer there, and then you're just hoping for a move back up to 1115. That would be a nice, $35 move, which would be nice. Or if there's initial strength and you get a breakout above 1115, then you got a lot of running room here up towards 1170. So the nice thing about this chart is you've got a void and you've got very, very well-defined ranges here and lines to shoot against. So I really like the technical setup as far as an active trading type scenario, because you know exactly where you exactly know the lines that you need to shoot against and be aware of today and into next week. Microsoft also has a nice clean chart. And yesterday, if you were on top of your game, we actually talked about this. We talked about this 337 as being an important level. And what they did right out of the gate was a quick reach down to 337 for a perfect tag. And just that fast, they bought it up. And you didn't have to wait long. And you were up $5 on that trade. And I'm not saying it's easy, but that's where, having alarms, knowing your levels, being ready with a trade, if you get it, to pull the trigger, and then getting a little bit of luck, that always helps. Because had you been ready and you got that reach down candle and you knew that was a key level, because look at all this resistance, breakout. Now all this resistance becomes support. That was a very, very, very objective place to take a long. And the fact that you got $5 in 2 hours was gravy, but you got to be in it to win it, right? I mean, it could have just held this line the rest of the day and it wouldn't have turned out to be an exciting trade, but you don't know that. You got to take your shots when you get them. And if you're at an objective level, then of course, if there was weakness, you would have been stopped out. But you got to hang your hat on really objective levels and your alarms and your awareness and what you're going to focus on, each and every day. Your key half a dozen or however many stocks that you can keep track of. And, if Microsoft was one of those, you had a golden opportunity here to get long. And then you can notice that there was a hesitation at 340. This candle came right back up to 340. Next candle came up to 340, couldn't get through. And then the following candle did. So even if you were, let's say you didn't get this, you were late or you didn't have it alarmed, but you had Microsoft on the board, recapturing 340 from below is a technical buy, right? Recapturing a level from below is bullish. And then you were able to get a fast $2 out of it. And that ain't all bad in a half an hour or an hour. You didn't get any more than that. But it was a positive move. So now today, 340 and 342 are the main areas of interest. Now, Amazon made a huge move yesterday, up $150, 4%. And we had talked about, I take that back. I've redrawn this chart and I've put the channels in, and they, these channels were not here yesterday, so I don't want to pretend like they were. But what was on the chart is were the levels. And we knew that this level here at the large volume over price support was a key level. We had it marked. We also had these prior highs marked at 3,600. So whether or not you captured this $50, if you had alarms in place, this would have been a technical buy at 3,600, and then you got, you got another 100 out of it, right? You bought it on the breakout of 3,600, and price closed at 3,700, and there was absolutely no reason to get out once you got in, because there was no scary candles, no big pullback. You just had a high tight flag, and beautiful strong price action. So now today you can use the bottom of this flag as your line to shoot against at whatever that is, 3667, something like that. You'll see that on your lower time frame charts, and so now the target is the all-time high at 3750. So just from a eyeball perspective, if bull flags fly at half staff, you got your first move and then you got your second move. So from a technical standpoint, the all-time high is certainly in the crosshairs. Google. We said yesterday that 2965 was your pivot, and then you got a nice move back up to the prior highs with some flagging action just below after the big move. So today, simple. If you get a breakout above 3,000, you can buy it. And I would assume that would be one of our Jesse Livermore setups, a big psychological level at 3,000. If you get a breakout above 3,000, you could be long against the all-time high. And I think that's that's the logical trade to make. If the fat man is going to continue to be really, really strong. And, the same things apply that we said in the other charts. You do have the bearish divergence here because we had the high back here at these levels of RSI and PPO, and now we're back to the same price level, but at lower momentum. So we've got to put that in the mix. But price talks. You get a breakout here above 3,000 and momentum takes off, then you can burn through those bearish divergences pretty quickly. Netflix. I don't know what happened to my title here, but anyways, we had a tag of 700 and we've backed off. Pretty clear here that you've got a pivot point at 682.50. You recapture that this morning, then you can look towards 690 and 700. If this continues to slide, then I would expect a pullback into 675. I would not want to see that break, or then you're back into the 660s. So you've got well-defined lines here with the price action on the way up. SMH had a gap up, strong day, and then consolidation, and that was on the back of NVIDIA that did well in its earnings. So now we've got a pretty big gap below, $5 gap with price up here. If you get a breakout north of the highs, you can be long. If you break down below this, it's really an island. You got a gap on this side. If you were to move down below here, you would be into the gap. So I would have, 308 and 311 alarmed. And if you were interested in that trade, you can go long or short depending on the break of which way price goes. Now I want to get into ARK a little bit. I'm going to go quickly, but you're going to get the idea really fast. And my thinking is this: let's say you were really long in your holdings in your portfolio, and we already talked about the breadth kind of deteriorating under the surface. And if we're pushing all-time highs, why is ARK rolling over? They've been weak. They never, ever since last March, they've never been able to make anything close to a new high. And that payment space, Square, PayPal, all those fintech names have not been doing so hot lately. So let's take a look at ARKF, ARK Fintech. We're right back here, sitting on the 200, really halfway between this resistance level and this support level way down here. Definitely had a low here that was saved. If you get a break below the 200 and below, let's say 50 and a half, I think you're going to get a move down here to 48 to test this level. And if things start deteriorating, you're going to get a move down here to 45. And the reason I bring this up is not to beat up on ARK. It's just another name to me. I don't really care what she does. But if you've got a lot of longs, I think these ARK names are setting up good for a rug pull, which could be part of a hedging strategy, or at least, get some irons in the fire to the short side so that, if there's a whoosh, you at least got a counterbalance to all your longs. And just yesterday, down 2%. That's a huge divergence from, the Qs being green and hitting all-time highs. You got to admit that. And you've got, momentum going out of town. You've got RSI about to break trend. And you've got price sitting on the 200. And, if nothing good happens below the 50, when you're below the 200, by definition, you've lost any kind of uptrend that you had going. So let's move on to ARKG. This one is even weaker. Why? Well, and I showed you this earlier in the week, but this is the genomics one. You've got a big bearish triangle here on the weekly, and you're moving in to no man's land here at 70, down 5% for the week in an up market. You can see that RSI has been bearish for a while, and PPO is in its bearish regime, and now you're getting the breakdown on the weekly and into a massive void on the charts. Now, can this reverse and break out? Sure. But you're below all the moving averages. You're below key support. You're below downtrend resistance. You got to shoot on the downside when you see this setup. Now, whether you take it or not, that's a different deal. All I'm saying is this is a very bearish setup with a huge risk-reward setup. Why? Even if you gave this $7 as a stop, from 70 to either 75 or 77.50. I mean, the way I see it, you got $15 of downside just for starters, and then the measured move has you down here at 45. But if it's down at 45, I think it's going to 35 because there is nobody home down here. And once something like that starts going downhill, I think it goes fast. Here's ARKK. This is the one that has a lot of Tesla in it. You can see losing steam. You've got a level here at 114. You're already below the 200 and all of that. I think you come down here to 107.50 and then potentially down here to 100. So that could crack today. And yesterday in an up tape, down 2.5%. Lastly, ARKW tried to break out from this big daily range, and now we're back inside, losing the 50. I think we're going to come down here at least to the 200 and potentially down to the bottom of the box at 137.50. So, bearish setup here as well, and then one positive. If one thing I didn't mention, we've got a earnings announcement this morning with Foot Locker, and we've got Hibbard here testing 100 again. If you get a positive Foot Locker number, you may get a pop out of Hibbard, and then we're into Jesse Livermore country. So have Hibbard on your radar for a move above 100 and taking out that big psychological level. You can see right here, failed twice. Maybe the third time is the charm. So hope you guys appreciated the content this morning. A little bit longer. New listeners, thank you so much for spending time here this morning on a Friday. I hope you get a lot out of the content, having the levels, having the commentary, getting your ducks in a row before the open so you can have a very productive day and wrap up to the week. Please hit the subscribe button and the alarm bell. Thumbs up is always nice. And longtime listeners, hope you're trading well. And I appreciate you staying with me. Please pass the link along to your trading circles, friends and family, other associates that may benefit from the content. I really appreciate it. And have a good trading day. And I will talk to you next time. This has been Chris Buss with Trader's Profit Compass.